This is one of the most essential topic for many traders and investors. And candlestick charting is a technique used by many of the traders, and almost 100 out of 100 traders that I know, they use candlestick charting to make their decisions during their, in their journey. So in this topic, we are going to talk about, we are going to focus on the regular bullish candlestick. So now, if we talk about the anatomy of the candlestick, on the left hand side where you see a bullish candlestick, which is represented by green color, and it could also sometimes be represented by white color candle. All right, so these are the two colors commonly used for bullish candles. And if it is bearish candle, then we would see either black or red, but it's most commonly represented with a red color candle. So now, if we talk about bullish and bearish candles, and why we call it a bullish candle is most of the time when the bulls attack, their horns go up. And how the bears attack, they often claw downwards. Alright, so that's representing the price. If the price goes upwards, we call it bullish. If the price goes downwards, we call it bearish. So now let's say, for instance, the part where it's filled with color, we call it the body. And the parts where we see going lower with just a line, we call it lower wick or lower shadow. Alright, then the upside is called the upper wick or the upper shadow. So now this is just another way of charting, of actually labeling these two candles. So it's the same as just now. So now let's go a bit deeper on the bullish candle. So now how to, charts, you may have many combinations of candles. And these regular bullish candles, they are situated in many parts of the chart. And for example, this is one, and this is two, then three. You see, you might see many of these candles. They are more common in the chart. Alright, so a lot of these candles can be seen. Alright, so sometimes when we see these candles, and usually when we see these candles, depending on the location of the chart, then we might make some different decisions, buy or sell, based on the location of this candle in the charts. But also it depends on the overall pattern as well. But that topic will be actually conducted in some other videos. So now imagine if you have the price chart like just now, you see the time versus the prices. So when you have these two variables, then let's say in the opening price, let's say when the day starts, this is when the day starts, and this is when the day ends. So when you have starting and ending, what happens in between? The prices will form a candle. Now let's say in a very simple format right here. So once the price opens right here, let's say 9:30 in the morning in the stock market, then first of all it went down, and up to this point it doesn't go down further, and we call it a low. So there's some price rejection there, and the price goes up high enough, and it goes up this area, and the price doesn't go up further than that, and it comes down with some rejection after that. And as the day starts to close, starts to end, and that's what we call the closing price. So this is how a candle is formed. It's formed based on the price movement within a session or within a day. So let's say, for instance, in a single candle, this candle, let's say we call it a day candle, it can be represented by many candles. Many candles within a candle. So let's say this candle, this price action started at 9:30, then this is around 7 hours session, right, and ended about 4:30. So one day session is around 7 hours. This is for stock markets. If it is future markets and some other markets, or even forex currency, forex could be 24 is around 24 hours. Futures is around 23 hours, right, around there. So now when the price starts, so here's the example. The price opens right here, and this is where we begin to mark the candle. All right, then price goes down, so we mark it as low. Then price travels upwards all the way, and this is where a lot of people, either they take profit, or there's a lot of, okay, let's just say there's a lot of sellers right here rejecting the bulls, and they could not make more effort to go further up. Then the price starts to go downwards right here, so it becomes more bearish, right? So there's a slight bearishness up here. All right, that's what we call the high side of the candle. I mean the high of the candle at the top. Then as the price moves down and the session closes at the blue dotted line, so a full candle is formed in the entire day. So we just call this a regular bullish candle. All right, so overall we can see the day, the price movement is overall on the upwards, like this one also as well. The price starts opening around this area, all right, during the start of the day around 9:30. Then that's where we mark right here, opening price. Then price goes down, gets rejected immediately, and it goes up strongly, rallies strongly. And then when it rallies strongly, then in the top here there's some weakness. Maybe a lot of the sellers are waiting at that level, so there's a lot of supply, gets rejected, then it attempts to go up even further, but it closes up than the previous high. So this is where we call it, yeah, a closing of the day. So it forms again a regular bullish candle. Right, so this is as simple as we can chart in this video right here. I hope you enjoy this video, and thank you for watching this video. Happy trading and investing. Striker X here, signing out.